What's up, everybody? It is December 21st, 11 a.m., Smart Money Monday. Welcome back, everybody. Those of y'all who know, this is something we do every week, every Monday except holidays. We know we'll go over the basics for those of y'all to ask questions. Those of y'all on YouTube, we have the link down to our Telegram below. And you can just subscribe to our YouTube. We will keep posting these videos as long as y'all keep finding value in them. So let's go and get started. I'd like to get let some of our current students participate in this call. So, as we all know, smart money is the technique that we use here at Outcome Reach. Now, can someone briefly just tell me what the difference is between smart money and retail trading? You can unmute yourself or type in the chat. Let's see. Tatiana, you want to tell me?
I think smart money is like smart entries, just trying to buy stuff on discount, but you know it's gonna go high. Like in a way.
Yes and no. Yeah, I see what you're saying. Um, Briefly, yeah, smart money is smart entries, and you're just trying to catch what these banks are doing. You see, Samantha says, smart money is institutional trading. We trade with the big boys. That's what I was looking for. So you got to realize that whenever you're trading, there are two predominant types of trading, and I can go on a rant about this, but it's going to be a very short rant. So this is about to blow y'all's mind. If you Google forex patterns, let's say you're a new retail trader, just saying you just started on forex, so you know people use patterns. So you Google, I wonder what some forex patterns are going to be. Look what shows up: head and shoulders, bullish pennants, all this stuff. Reverse head and shoulders. You also have indicators. So you can type in forex patterns indicators, and you'll see stuff like Bollinger Bands, um, exponential moving averages. Well, let's look at the bigger picture here. You got to realize that the banks, they manipulate this market. So they don't want you to know how to trade with them. That's the reason that if you Google forex trading patterns, all this comes up. This is intentional. Now, do these patterns work? Sometimes, but it has so many caveats and so many if thens. Then by the time people realize it, without realizing it, they have an entirely different method. So, with that said, this is all about learning how to do the opposite of what the retailer is doing and following the banks, the institutional traders. Because if trading were truly as easy as looking for a chart pattern and following it, why is it 96% of traders fail? Think about that. So let's go and get into how we actually do this. Three things. What is the first confluence? I know y'all know this. Jacob, what's the first confluence?
Smart. Shit, man. Oh, I know it.
Liquidity. There you go. Oh, yeah, y'all can chat too. All right. I'm gonna keep the chat open in this case because I don't be looking at it sometimes. Yeah, the first one is going to be liquidity. Now, what is liquidity? In retail terms, liquidity is the exact same thing as support and resistance. When retailers are buying off of support and resistance, they are donating, and I use that word for a reason. They are donating their liquidity. So if you look at this chart, what do you see right here? What's all this? Bam. Bam. That's equal lows, isn't it? So according to retail terms, let's pretend all this to the right hasn't happened. This is what retailers is looking at right here. And what they see, where's my toolbar at? What they see is this right here. So they're expecting price to come down to this level and shoot back up, right? But here's the key. When they're doing that, they have all these buy limits right here on this level. They have their stop losses right here below it. And that should make sense because they're expecting price to hit this level and go back up. But that's not what happened. Price slammed right through it and broke structure. So that brings to the second smart money confluence, which is going to be your impulse move. And I'm going to be sure that I'm clear about this. This is something that's often misunderstood with students. The big thing about the impulse move is that it needs to break structure. Now, Matt did a video about market structure earlier, so you can go back. It's on the YouTube. You can go back and refer to that. Here's structure. You can use a trend line to find structure. You see how price is going in an uptrend right here? That's your structure. This impulse move right here, look, it slammed through the liquidity, the support. So all these retailers are stopped out, and it broke the structure, trend line. You can use trend lines to find structure. That is how you know that you're in the impulse move, because it broke the structure. So this long move right here, where is my toolbar at? I need my toolbar. This move right here, that is your impulse move. How do you know if it will break? It will break liquidity and not bounce off the liquidity. The key about this method, you are waiting for it to break liquidity. You're not, we haven't entered yet. We haven't even gotten to the entry yet. The only time chart patterns work is if they are in line with the bank's mode. If reach doesn't move, a head and shoulders, a flat pattern, etc. Exactly. So yeah, these work. And the thing the retailers aren't realizing when they work, they think it works 24/7. No, it only works if it's doing in the direction that the banks are going. If it's moving with the banks, then it's going to work. But most times it doesn't. So they get stopped out a lot. But that brings us to the third confluence. We have the liquidity right here that got slammed through by the impulse move. The third confluence is going to be what we call the outcome candle. Get it? Outcome reach, outcome candle. Now you are going to also see this called order block, OB, or optimal trade entry, OTE. It's the exact same thing. Now there are small, slight differences, but that's more advanced. We'll get into that to a later video. So the outcome candle, what does it look like? It's an engulfed candle. So I'm gonna try to match this with my chart colors. That's your up move right there. If you're selling, that's gonna be your up, and that's gonna be your down. What's my color at? Right there. And then what would you do with this? My toolbar. You would put your sell limit right here and your stop loss right there. Just like that. So if you look at this, now of course it can be the exact opposite for buy, and that would just look like this. Buy limit right there, stop loss right there. But if you're looking at this and you go back into our example, the OC, outcome candle, order block, etc., it's always going to be before the impulse moves. So if you zoom in right here, what do you see? Golly, y'all blowing this chat up thing. Right here, look at that. That engulf candle, your OC. So you would put your sell limit right there. And then you put your stop loss up here on the top of it. And that's it. Y'all see how simple that is? That's completely it. So Adrian asked earlier, how do you know if it's going to bounce off liquidity? This is when you would set your entry right here after all this happened. You haven't entered yet. This, once you see all this, that is when you're going to set your limits. So this is when I say go back, just go. Don't get caught up staring at the chart. So less trade you take, the better. Easy. See how price just barely missed that stop loss? Easy. So what was your risk here? You risked about 15 pips. Price went down 175 pips. Really, really, really nice risk to reward. You do this, it is so hard to lose because the risk to reward is that you can lose 5 trades and win 1 and you're still in profit for the week. So let me go and hear y'all questions. Sakina, Dylan, y'all want to jump in?
Dude, I'm just watching, bro.
he said this is day off.
Sorry, bro. I'm just feeding my daughter. Sorry.
Oh, no, you're good. Adrian, does that answer your question about the liquidity break?
Yeah, I was just about to ask if anyone had any questions, though.
Yeah, so it did. Thank you.
All right, good.
Now, it's just to look further in the chart, around about November the 30th, you can see it bounced off the liquidity area, but that's probably the second touch.
You said around November 5th.
October the 30th, I think. You can see it touched.
Oh, right here.
Yeah, second touch, I think.
Yeah. So what that did was that created liquidity. That created equal lows because let's go back. In the retailer's mind, this is what they're looking at as this happens. Let's pretend this hasn't happened yet. These are equal lows. All the retailers are expecting that it's going to hit this level again and shoot back up. So what they're doing is they're placing their orders right here on this line, on this level, and they're putting their stop losses right below it. So then what banks do is they will slam price right through that. And that's the impulse move. All right, let's see. Do you look at market structure? Yes. Market structure ties into actually all three. Market structure is the key to this entire method. And we can actually go over that right quick, just as get go. Now, Matt does more in depth than that. It's going to be on Outcome Reach's YouTube. That's going to be Outcome Reach. Just type that into YouTube and you will see it. Yeah, you got to get market structure. That is the absolute basis. So let me see if I can show you how I would go about finding that. All right, so for me, it goes different from person to person. I mean, I know all the admins, educators, we have different techniques, but mine, I use 3 time frames. I will use the higher one, the 4 hour, because I'm an entry trader. That's usually the higher one I use. Oh, I'm sorry, I realized y'all trying to get the meeting. I will use the middle one, usually the 1 hour, and then the lower one, usually 15 to 30 minute time frame. So on the higher one, in my case, the 4 hour, I'm looking to see, okay, what is price doing? Now, people could say, oh my goodness, you gotta check daily, you gotta check daily, you gotta check daily. Well, yeah, of course. This is also, let me clarify this. Yeah, Adrian, I'll get in a second. Yes, some people might say UCAD is in a downtrend in the daily time frame. Some people might also say UCAD is in an uptrend. They can both be right. You got to realize that if you're a scalper, price may be in a temporary downtrend for you. If you're a position trader, price may be in an uptrend for you. So be sure you stick with your analysis. Now, be open-minded about it, but you get what I'm saying. So here's what I'm doing. I'm looking at the structure right here. I see equal highs right here that eventually got broken. And I see plenty of sell side liquidity on the bottom that needs to be broken. So I'm expecting price to come down here and break this liquidity. So I'm looking for sales because you also come right here, you see the price is going down. You have higher high, lower high. So I'm expecting price to continue going down. This is where you can also look for your take profits. At least I'll look for my take profits. I will go on the higher time frame and anticipate where I'm expecting price to be. Since I know that price is going down because you see the lower high right here, I'm expecting price to eventually break these highs or break these lows. I'll put my take profit. You can either put it at this liquidity level or down there. So then you go to the middle time frame. That's where you further anticipate what price is going to do. Around the middle time frame, this is what we just went over. Look, you see equal lows right here. So you know that price needs to break it, and it did. And since we are also saying that price is going to continue going down, and we're looking for an entry to go down, what do we see right here? That's going to be your entry. And we already know what happens with that. I'll also go on the 15-minute time frame. I don't know if it's going to let me. If I do this, we'll try it. Okay, let me. And 15 minutes where I find usually my precise entries. So look at that right there. That's just a far more precise entry than it was on the other time frame. So that's how I go about doing my market structure. Does that make sense, y'all? Yeah, so that's just, it varies from person to person. That's how I do it. I can show you Matt. This is what he does.
Is that a drop-based drop right there, though?
Where? Right here?
Yeah.
Sort of, yeah. Actually, yeah, it is.
Well, there you go. There's your entry.
There you go, right? You also see, this is what Matt does. Matt just kind of looks at it. He says, look, there's your market structure. That's not the way to do it. It's just, once you backtest enough, you're going to find your individual method to do it. That's just mine, the way that it works. Just tweak some other education videos I watched, and yeah. So that's how you do it. All right.
Matt just don't like to babysit.
I don't blame him because another thing that we were actually talking about last night. Wyckoff is another way that you look at market structure. Now, Wyckoff, as you all know who are in the course, you have all your specific points. You have your automatic rally, your phase B, phase C. Cool. Do I look at that every time I mark up a Wyckoff pair? Hell no.
Nope.
Why? Because it takes too much. What you were looking for is a break of structure. We just went over structure. So you can mark this up. This isn't really accumulation, but it kind of is, sort of. You can tweak it. Here's what I'm looking at. You can either say, okay, look, we have sales stop at an automatic rally. Here's your spring. No, look at this. There's your structure. There's the break of structure. That's how you do it, right there. Now, when you're first starting, yes, it helps to get down and look at all the nooks and crannies of it. That way you can understand everything that's going on. But once you backtest enough, you'll be able to, just kind of eye it. AA, who did you learn from, if I may ask? I learned from Matt and Dylan. And I went through the Outcome Reach course. I completed it, and then I went on to become an educator. So the exact same course I went through is available to all of you. You can find that right here at outcomereach.com. One-minute entries. That's the beauty of smart money. If you want to do 1 minute entries, go for it. Matt knows someone who does it on the second time frame. You can do whatever entry you want. Do I like 1 minute time frame? No, but you can do it if you want to. All right, someone had a question earlier. What was it? Oh, what was it? The EUR GBP trade? Okay, yeah, we can go over it. This is one of the pairs we were looking at that didn't go how we wanted to. Let's see. What time frame was it? I think it was the 2 hour.
4 hour.
4 hour. Oh, right there. Probably because price is coming up to take out these highs up here. You got structure, you got equal highs all in this area, and many below it. So you got equal highs there. You got plenty equal highs here. Looks like price is just going up to take out the structure. So I'm probably anticipating that price is going to at least come up to this high right here. So I will look for price to break this high, and then I will look for an entry. Remember, don't enter on the high. That's retail. You're going to look for the high to be broken because they got stop losses right here. In fact, they got stop losses right here, and they got stop losses right here. See how the bank's just collecting money? The banks are greedy, in case y'all ain't know that. So once that structure gets broken, that's when we're going to look for an entry. So yeah, we just had to take a step back, and once we looked at the bigger picture, yeah, you see how price is going to take out more structure. But it's
and you got all of this right here.
Oh yeah. Style liquidity. But that's the beauty of this method. That was, what was it, 20 pip stop loss? I take profits in the hundreds of pips. So it's fine. We all take losing trades sometimes. So we're just gonna get a big one. Another one. Crazy be asked for buys. Look at this. This is sell side liquidity, right? This is what we just went over a minute ago. The retailers are all looking for buys right here, but their stop losses are right here. So what are the banks gonna do? They're gonna do their greedy stuff they always do. They're gonna say, yeah, okay, we're gonna just, oops, yeah, I got your stop losses. That's what you can anticipate to happen. Or it could even go even lower than that. Price could do this. You down. You just gotta watch it. So at this point, this is where you are waiting to see what price is going to do. This is where you're not just entering. This is another error I see people doing. Every engulfed candle is not an outcome candle. I don't know how many times I can say that, because I know the biggest thing I see people doing is they will be on the 5-minute time frame or the 30-minute time frame, setting like 10 limits a day. They all get stopped out. Every engulfed candle is not an outcome candle. It has to follow all the confluences. If you just start looking, oh, that's nice. If you start looking for every single engulfed candle, you're going to keep getting stopped out and you're going to end up breaking even for the week.
Yeah, and to add on to that, not every down candle before an up move and every up candle before a down move is an outcome candle either. Here, let me draw, just in case somebody didn't understand that. So say you got a down candle right here and price goes up. Just because this is the last area that went up doesn't mean that this is an outcome candle. What happened right here and right here is what determines what's going to happen when it comes back to this area, right? So did this area right here capture liquidity? Did this area right here have an aggressive impulse up, right? Law of effort, sort of like this example right here, okay? So that's all I wanted to say.
All right, what other questions y'all got before I jump on my weekly psychology rant? I know y'all got questions. Y'all ain't gonna ask now. Don't be joining my DMs later asking questions when I gave y'all the opportunity. I don't mind. I'm joking with y'all. All right then. Quick psychology.
My fault. Do you trade what's it called? Like any indices, like U30 or SPX or anything?
I personally don't. I don't trade indices or commodities.
Yeah, I used to, and then I stopped.
Ever since
Dylan, you were like the indice god, bro. Why you stop? That boy moved on to exotics now. You still with Taco?
Hell yeah, I love peso. That's my pair, bro.
Bro, I got tired of eating tacos.
The peso pays me, bro.
I'm fucking Mexican, bro. I don't like that shit no more.
Oh my
god. Oh shit. Hey, peso pays good.
Oh, it does though. I ain't gonna lie, it does. But peso, U30 did me real good this morning, bro. I caught that drop.
God damn, that's an ugly pair right there.
I ain't gonna cap. I love this pair so much.
Why?
DKK because
bro,
of lower
what
time
the
frames.
hell?
Bro, that's hideous as fuck, bro.
All right, hear me out.
How do you trade off that?
Hear me out.
You don't.
Bro, it's
look how clean these entries are though. This USD DKK. I love this pair.
That should be consolidating.
It's hella liquidity there.
That thing don't know what direction it's going in.
Look, boy, you better not ever miss that move.
All right. Oh, someone said ask something in chat. Let me see.
Yeah, the exotics only exotics I trade is the peso and euro NOK.
Yeah, I was about to say I used to do Enoch too, huh?
Mm-hmm.
Damn, bro, you be eating off them hoes, huh?
Yeah, exotics pay the bills for me.
Tatiana, yeah, I'm in the $20 challenge. I think New Year, might as well try something. What is your average monthly returns in percent? That depends on the type of trader you are or the accuracy of you are. I'm not going to get into my specifics because, you know, that's my business. But I will tell you I average about 80 pips a week. So whatever your average monthly returns are, it's just going to be depending on your individual situation.
Dude, I'm fine with 50 pips a week. Dead ass.
Mm-hmm.
Like,
yeah, 50 can pay bills.
All you need is a standard with a 50, you good.
Yeah, that's 500. That's 500 right there.
Yeah, it's just because what you're looking for, you guys got to remember, is that you're looking for consistency over time. Now, we all have our weeks. We all have our weeks where we end up with like 200 pips. They happen maybe about once a month. But that's not, I mean, that's cool, but the goal isn't that. The goal is just consistency because
and we all have our weeks where we have our strings of losses too. So like asking what percentages, it's not, you're not gonna get, you know, you're not gonna gain 10%, 5% every single month.
Yeah, you gotta take what it gives them. You can't take every setup you see and think that every setup is valid. Like, you know, like you're gonna get times where you do have a valid setup and then it hits stop loss, and that's not your fault. That's just, you know, an extent of the market. So you just gotta take what the market gives you. You can't really base your trading off a percentage of how much you want to gain a month. Like I said,
Yeah,
just take it.
Yeah, for
Yeah.
real though. That's how it was last week. Last week I had all kinds of valid setups, and my stop loss was getting slapped all week. And I was like, damn, bro.
Yeah, bro. Shit happens. String of
It's just
losses
market.
happen.
But you know, you got that risk management, then it is what it is. Because once you get that risk management, you know you're anticipating that you're gonna have a losing streak, but you're not gonna be emotionally drawn to it. You're gonna be like, oh, it doesn't mean I'm a sucky trader. It just means, you know, it's a losing streak.
This is how the market is sometimes, bro. Like Kylan just said, like say you have 10 pip stop loss, you lose 5 trades, and then the one trade you win goes 50 to 100 pips. You're back in profit, but you lost 5 trades in a row. Which for me personally, losing like I only look at 6 pairs, so losing 5 trades in a row is really hard for me. I don't lose a lot, but I'm not gonna lie, like I have my string of losses on the pairs I do watch sometimes. It's not that I'm a bad trader or like my psychology is bad. It's just, or it's not even possibly that I'm picking bad. Like, for instance, if your setup lines up with your confluences, is that a bad trade?
You
Is it a
guys
bad
can unmute yourself.
is that a bad trade? If your setup lines up with every confluence that you have, is it a bad trade?
No, I don't think
No.
it is. I mean, if you feel like all your confluences are in order,
Exactly.
I mean, the market's a market. It's gonna do what it wants. Like you said, you know, the banks are gonna try to get stops and they're gonna try to manipulate shit. So I mean, like I said,
Yeah.
I had all kinds of clean setups last week, and bro, all my shit, like I was in profit maybe 15, 20 pips, and then come back, my shit slapped my stop loss. I'm like, damn, bro, but like it's just the market, bro.
Yep, exactly.
If you trade on Sundays, you can go and expect that to happen. I'm just gonna let you know that right now, if I'm being honest with y'all. So I mean, if you trade on Sundays, I know that's another mistake I see. Some people will jump in on Sunday and trade like 5 and 10 pairs. Do not get surprised and have them get stopped out because Sunday's just stop loss day. That's what I call it. Liquidity day. Samantha, here's XRP right here. So first of all, if you all are not invested in this, I highly recommend y'all do so. I'm taking about like every paycheck I get, I'm putting a percentage of it and dumping it in XRP.
Oh, that entry you had, smack.
Yeah, this is where we just enter right here. So regardless, we're spending it to fly.
Move that up a little bit. Yeah, there you go.
Now, Sakina is also expecting that price could possibly come down here for structural reasons. If it flies, cool. If it goes out here, even better, because that means it's gonna be cheaper. And when it's cheaper, I can buy more. So regardless, y'all need to be looking at XRP. Thank me later. Yeah. All right, real quick psychology event because I gotta go get my haircut.
And Bitcoin.
Oh, and Bitcoin. Let's see.
No, I'm just saying, like, it's over 20K right now, so I'm sure we're gonna get a slight pullback at least, and then go higher probably. We'll see what 2020 or 2021 gives us in the crypto world.
Definitely. Just be sure, you know, every time Bitcoin's been asking this since about 2014, I forget when it shot up. Every time you're going to see a bunch of people saying buy Bitcoin, buy Bitcoin, buy Bitcoin. They are no different than FOMO traders. Stick to your analysis. You can look at cryptos and stocks the same way you do with market structure. You're going to hear everyone saying buy, and the moment it gives some pullback, they're going to take out. Hold. When it gets cheaper, buy some more. Really treat your crypto wallet like another savings account. Every paycheck's put a little bit in there, or a lot, depending on the type of person you are. Kylan, do you invest in stocks for long term yet? I'm getting on that. That's one of my goals for 2021. You can learn about that in the podcast we're gonna host tonight. But when it comes to stocks and crypto, it's not monthly. It's just like a savings account. I'm just putting it in there and holding. So yeah. Real quick psychology, man. We got about 7 minutes left. So one thing about goal setting that I've learned, it should be like a river. And what I mean by that, what I mean, y'all listen up now. What I mean, people often get reliant on motivation to push them to do what they got to do, and that motivation can come from self-help books, movies, quotes. There's nothing inherently wrong with that, but at the end of the day, discipline's gonna push over motivation. And I know that's cliched, but let me get something concrete. Whenever you're making growth in life, it's not gonna look like this. Oftentimes it's gonna look like this, but when it comes to like getting really good really fast, it's gonna look like this. And what does that mean? You're gonna have a bunch of keystone habits that you need to form. Keystone habits include meditation, regular exercise, eating right, studying daily, reading, stuff like that. Because when you build upon these habits, you get small accomplishments. And these small accomplishments, as small as they be, you build momentum. And when you build momentum, your accomplishments start to look like this. And I can give a personal example. Me just starting to trade forex. I had so much intensity because I was in it for get rich quick schemes. I got scammed, but that's for another conversation. Um, when I first started forex, I was so intense with it, and the result of that is that I learned it really, really, really fast. Then I met Matt and Dylan. And I learned even faster, and I got accomplishments that went up like this. And that went into the real world because I was making accomplishments with forex. At the same time, I was making good eating habits. At the same time, I was learning stuff. So it was like all of a sudden, I was going from stagnant just like this. And that momentum is what motivated me. So instead of having to go for self help or quotes, it's the momentum and saying these accomplishments to build it to make even bigger and bigger accomplishments. So whenever you're going about doing whatever you got to do, whatever you need to do to get yourself motivated, look at that. Use self help, ease off of it because self help is anti-productive. Y'all have heard my rant against self help before. It's not productive. It's counterproductive, as a matter of fact. So just try to build momentum. It's going to be hard at first, but once you're in that grind, you're in that grind. Everything's just going to be knocked out the park. So that's my psychology rant. Y'all got any questions? Any comments y'all want to add?
Facts. And that's a perfect example too of what you said about what'd you say about the water?
Yeah. So there's a quote in the Art of War: when boulders are tossed through water, it's not due to a current; it's due to momentum. It's momentum that pushes the boulder through the water and creates this torrential rock that could just knock stuff away. Like a snowball, it's small at first, but as momentum picks up and it keeps rolling on the hill, it gets bigger and bigger and bigger.
Okay, facts. So yeah, what I wanted to add to that is your progress is gonna be like that water flowing down that river. So water doesn't just flow straight down a river, right? It's always crashing against rocks, crashing against the walls, you know, going against a current, goes against shallow areas where it might go faster than when it went in a deeper water, right? But it's always going to get to where it's gonna go in the end. So that's what it's gonna be like in your progress. If you just stick to it and you know, always remember what you're doing it for, you're gonna get to where you're going to go.
Exactly.
Yeah,
Well,
and on another note, with that being said, it took me 3 years to get where I'm at now. So everybody's journey is different. So because the next person in the group or something like that is ahead of you, don't think that you're behind. Just remember that your progress relies on you, not no one else.
Facts. Facts.
all personal. Take your time, but have a also have the sense of urgency in your life. You know, when you have that sense of urgency, it'll fill you kind of with a sense of purpose. That's something I found. I've read books about that. So, take your time, but also have this slight sense of urgency that knows, okay, here's where I am, here's where I want to be. But we're going to jump more into psychology stuff tonight in the podcast. We're going to be discussing goal setting and the goals we all have for 2021. So, all of you on this call, what time is it going to be at? 8 or 9, Dylan?
9 p.m. Eastern time.
All right, 9 p.m. Eastern, and yeah, jump on the call. We want to actually have a conversation with y'all. So like, when y'all jump on, see if y'all can find some time around the time to just kind of unmute yourselves. We can actually have a conversation. We're just talking back and forth. We're not just talking to ourselves. But with that said, I'm gonna go and end the call now. This was Smart Money Monday, December 21st. It will be uploaded on YouTube. And I will see y'all. Are we gonna do it? Yeah, we'll do it next Monday. But the Monday after that, we'll probably take a little break since it's going into New Year's. But I'll see y'all then.